Fine. So with that, we have already started National Income Accounting chapter. Two sessions we have had, and in both the sessions we have learned the theoretical part, gone through the theory part. In first session we understood about the two-sector model of an economy, the sectors of the economy, how the two-sector model works, their assumption and everything. And in the last class we have gone through few terminologies which was very important. So I am strongly saying you all that please go through that thing because it is very important while we will solve numerical questions from national income chapter. Those terms are going to be occurring very frequently. So at that point of time, we can't go back and again understand the meaning of term, right? So we should be aware of all the terms and terminologies which are related with this chapter. So last class we have already covered those terminologies. Now you will have to go through it once more. And from today's onward, we are going to start with the numerical parts of national income. Today we are just going to do the small part of it. Then from next class, probably we'll be starting with the different methods. Which methods do we use in order to calculate the national income of the country? Fine. So I hope you all have your pen and notebook because we are going to need that. No need to carry your calculators. Okay, so this goes according to your school. If calculators are allowed in your school for economic subject, not talking about accountancy, then still fine, you can carry it and take it with you. But if it is not allowed in the school, then here also we will not be using calculators. Okay, the calculations are not very big, basic calculations. I hope and I know you all can do it. So no need to carry calculators. But if in school it is allowed, they have given you the permission and it is still fine. Fine. So, so there was also a homework uploaded for you all, chapter 1, introduction to macroeconomics. Today is the last day to complete and submit the homework. Okay, so from tomorrow onwards, you won't be able to see that homework on your dashboard. So please go through that as well. Now coming to the part, the topics which we are going to see today is the basic aggregates of national income and numericals on aggregates of national income. So we are going to study what basically aggregate is, and also on the basis of this aggregates, how can we solve numerical questions. These are the two important things which we are going to see today in the session. Now by the term aggregate, can anybody tell me what do we mean by aggregates? Any idea? Anyone? Not a clear definition or a clear meaning, just whatever you all know about it, or if ever you have heard about it. Then any idea what do we mean by the term aggregate?
Large amount of data.
Okay. Yes, that could be the one meaning of it. But if we talk about what do we mean by aggregate in national income chapter, according to this chapter's perspective, then what do we mean by it? See, we have already seen or understood the meaning of national income. Goods, total goods produced in the country and sold off in the country. Whatever the income we generate, the country generate is nothing but national income. So when goods are producing the goods and selling those goods, so it can be in different units. Like for say suppose I have produced 10 mobile phones and sold this mobile phones. In return I got say suppose 500 rupees. So this is phones. If I say that I have produced 5 kg of wheat and after selling this 5 kg of wheat, I am getting 1000 rupees. So here the unit can be 10 mobile phones units. Here what is the unit? Kg is the unit. So likewise, country deals in different units. It can be kg, kilograms, it can be grams, it can be meters, centimeter, liter. So there can be a different unit. Now we know that these different units cannot be calculated together. We say now all the kg related goods will calculate at one place. Liter related goods will calculate at one place. It will be one category. So likewise we categorize it. But when we compute national income, it is very difficult to categorize so many different units. Along with that, these are in terms of goods. There are so many services which the country produces. So how are you going to categorize these services? Doctor services, banking services, teacher service, lawyer service. So many different services are there in the economy which are being produced on a regular basis. So how you will calculate the entire country's income, national income, if you have so many different units? It is not possible to categorize, sit and categorize each and every unit and then calculate it and then see. So that is why what we will do is we will calculate it together and we will call it as aggregate. We will not give any other unit. We will not say it's in kgs, it's in liters, meters, centimeters, nothing. Simply we will say aggregate. This is the aggregate of national income. So that is nothing but the meaning of aggregate. Now, when we talk about aggregate, there are total 8 aggregates in the economy. Total 8 aggregates are there in the country, about which we are going to discuss and learn that what all 8 things are there, 8 aggregates are there. So first of all, let us divide the lines into 4 parts. I have divided these lines into 4 parts. Now, every line is again getting divided into 2 parts. Third one is just getting divided into 1 part. Apart from the other 3, apart from that, other 3 lines are getting divided into 2 categories or 2 parts. So first, let us divide it. It can be divided as gross and net. Second line can be divided as domestic and national. Third line is divided into only one part, that is product. The last line is again divided into 2 parts, that is market price and factor cost.
Ma'am, I'm having network issue.
Sorry?
I'm not able to hear you properly.
Acha, so is there any issue from my end or from your end? What do you feel?
I think it's from my end.
Okay, just refresh, see if it is possible, if it is happening, just refresh your page or log in again. Okay. So, as I said, listen to this very carefully, very important. If you understand this part, you can solve any question from national income because this part is extremely very important. Okay, so listen to this, understand it very carefully. So there were 4 lines. I have divided all the 4 lines into 2 subparts or subcategories. Only the third line is divided into only one part. So first line is divided as gross and net. Second line is divided as domestic and national. Third is divided only in one word, that is product. And fourth line is again divided into 2 parts, market price and factor cost. From here only, we are going to make 8 aggregates. Okay. From how these 8 aggregates can be derived, that also we will see over here. Now let us understand each terminology and understand that with each terminology there is one more term which is going to get associated with. So first line we will take gross and net. Gross and net. So I hope I am clear with this term because in the last class also we have seen this terminology of gross and net, wherein I said gross is something or gross is the actual value of goods and services. Okay, gross is the actual value of goods and services, whereas Net means after doing all the deductions, the total amount or the total value left in our hand is called as net. And we know that any asset we purchase gets depreciated. So gross and net has a direct link with depreciation. How? Let us understand it with the help of an example. I purchased a mobile phone which was for rupees 5,000. Again, I am taking small amounts, small numbers. Do not feel that it is an impractical example, or do not get into the in-depth knowledge of an example. It is just an example for our understanding's sake. I have purchased a mobile phone which has cost me rupees 5,000. Fine. So this 5,000 would be a gross value. As I have already said, gross value is the actual value on which you purchase the goods and services. Now, after 2 years, I have used this mobile phone for 2 years, and after 2 years, I feel that I want to sell off this mobile phone. So this, since it's a mobile phone, I know its value is going to get depreciated day by day. So now when I went to sell this mobile phone, I received, say suppose 1,000 rupees gets depreciated and I get 4,000 rupees. So with this, what did I understood? Net is the value, or net value is the value which is remain in our hands after doing the deduction of depreciation. Fine. So gross and net are related to each other. They are related to each other with one more important term, that is depreciation. Depreciation, in the last class we have understood very clearly what depreciation is, and you all are also studying about the term from class 11. Depreciation means nothing but, in a very simple language I'll just tell you, nothing but the fall of value of goods and services. So here also the same thing happening. Gross value is the value at which you purchase the goods, and net value is the value which is remain in your hands after doing the deductions of depreciation. Now, if I tell you that you have to, gross value is given to you, depreciation is given to you, how you will find out net? So you can tell me net can be found out by using the formula gross minus depreciation. And if I say that you want to have to find out gross, so how you will find out gross? Net plus depreciation. When you add depreciation to the net value, you get gross value. When you subtract depreciation from gross value, you get net value. I give you in a very simple sense. This was just for your understanding. I will give you it in as a flowchart format so that it becomes easier for you to understand. So first of all, again, gross and net. Gross value is the actual value at which you purchase the goods and services. Net value is the value which is remain in your hand. Gross and net has a relationship with depreciation. Okay, so now I'll just tell you that how can you remember this. Very simple. Now, if you want to go from gross to net, you have to deduct depreciation. And if you want to come from net to gross, you will be adding depreciation. Fine. So if you, gross is the actual value, when you reduce or when you remove the depreciated amount, the total amount which remain in your hand is called as net value. After net value, if you want to again go back to the gross value, you will have to add back the depreciation which you had deducted. You will directly go to the gross value. So from gross to net, if you want to go, you have to deduct depreciation. And from net to gross, if you have to come, then you have to add depreciation. If you want to write it in a formula manner, then you can write it like this. Net is equals to gross minus depreciation, and gross is equals to net plus depreciation. So in both the ways you can remember the thing. If you feel that flowchart manner is easier for you to remember, then you can remember it in that way. If you feel the formula is more easier to remember, then you can remember it in formula based. Now you have to write down one note. Now what is this note? Everything, every term is going to have alternative names. This I have told you in the last class as well, that every term will have alternative names. In the numerical question, they might not give you depreciation term directly. They might give you the alternative names of depreciation. So what are the alternative names of depreciation? So I will write it. Consumption of fixed capital, replacement of fixed capital, replacement cost of fixed capital, and one more, current replacement cost. So there are three different alternative names of depreciation. In exams, in numerical questions, they might give you any three names, out of which you should know that it means nothing but depreciation. At times directly also they might give you depreciation, they might directly write it depreciation, but at times just to confuse you all, they might use the alternative names like consumption of fixed capital, replacement of fixed capital, replacement of cost of fixed capital, and current replacement cost. Fine. So the first terminology, did you all understood? Gross and net. It has a relationship with depreciation. Gross is the, if you all want, you can just write it in the bracket. Gross is the actual value of goods, and net is the value left after deductions. Okay. So gross, actual value, net, the total amount of value which is remained in our hands after doing the deduction of depreciation. If you want to go from gross to net, you have to subtract depreciation. If you want to come from net to gross, you have to add depreciation. Alternative names of depreciation: consumption of fixed capital, replacement cost of fixed capital, current replacement cost. First line, is it clear? Any doubt? Note it down. As I have already informed you, all have to carry your book and pen in order to note everything somewhere. Maintain proper notes, because this will help you all while doing the revision. I'm telling you. At the end moment, what happens? We don't have proper notes and we forget all of these small things. So make a proper notebook for this, taking the notes of this from this chapter. Up to your convenience. If you want to refer the flowchart, you can refer the flowchart. If you want, you can refer the formulas. And if you all simply remember, just simply remember, gross is the actual value, net is the value which we get after doing the deduction. So gross minus depreciation will give me net value, and net plus depreciation will give me gross value. Is it done? Should I move to the next part?
Yes.
If there is any doubt, you have to stop me there and there itself and ask to repeat. Okay, very important. Next line, let us move towards the next line. The very two important terms from the next line is domestic and national. For the first, gross and net, there is a relationship of depreciation. Now coming to domestic and national, they have a relationship with NFIA. NFIA is nothing but net factor income from abroad. Let us move towards the next part. You all have noted down this, right? So I am clearing this, erasing this. Fine. So next very important part is domestic and national. Domestic means what? The goods and services which are being produced within the domestic territory. Now, what is domestic territory? Domestic territory means the goods and services which are being produced within the country. National means what? The goods and services which are produced outside the country also. That means if an Indian based company is producing in USA, then that also will be counted in India only. That is national income. So domestic and national has a direct relationship with NFIA. NFIA, the full form of NFIA is net factor income from abroad. Okay, net factor income from abroad. So when it comes to domestic, we know that here only the goods and services which are being produced within the country is going to get involved. But if you want to know the national income from domestic, if you want to go to national income, what you will have to do? You will have to add NFI. Okay, from domestic to national. But if you want to go from national to domestic, then in that case, you will remove NFIA simply. If I tell you that the domestic income is 20 rupees, national income is 10 rupees. Now, if I tell you that you have to calculate national income. So, from domestic is given, you have to find out national income. How you will find out? By adding NFI. Same way, if national income is given and I tell you to find out domestic income, then how you will find out? By deducting NFI. Fine. So once more, domestic income is the income which is being generated within the domestic territory. National income is the income which is being generated all over the world, but which is India's based, are included in our income. So there has a relationship between the domestic and national with NFIA, that is net factor income from abroad. Whatever we are incurring from abroad, that needs to be added in domestic in order to get national income. Same way, if you want to just find out domestic income, then you have to remove net factor income from abroad, whatever you have received from abroad. Right? So again, for this, we have one chart. Whatever is simpler for you all can refer to it. If you want to go from domestic to national, you have to add NFIA. And if you want to go from national to domestic, you have to deduct NFIA. Now, in the formula form, if you want to find out income, the formula would be domestic plus NFIA, and if you want to find out domestic income, then the formula will be national minus NFIA. Fine. Domestic and national has a direct relationship with NFIA. NFIA is the income earned from abroad. If we want to find out domestic income, then we'll have to remove NFIA. And if we want to find out national income, then we have to add NFIA. Now, when we talk about NFIA, net factor income from abroad, it might be directly given to you in the question. At times, it will not be given to you in the question. So, at time, what is the formula for it if it is not directly given to you in the question? The formula is net factor income from abroad minus net factor income to abroad. That means from abroad means the income which we are receiving or which we are getting from the foreign countries. To abroad means the income, the payment which the home country is making to the foreign country. So if we have to deduct this net factor income from abroad minus net factor income to abroad, we will get NFIA, that is net factor income from abroad. Okay, so if there is a relationship, what is the relationship between domestic and national? There is a relationship of NFIA. NFIA is nothing but the income received from abroad. In domestic income, we do not calculate or we do not consider the income which we have received from abroad. But when we calculate national income, we do include the income received from abroad. So that is why if you want to find out domestic income, you will have to deduct NFIA from national income. Same way, if you have to find out national income, you have to add NFIA to domestic income. At times it will be directly given to us in the question. At times it will not be given. So what we have to do, we have a formula: net factor income from abroad minus net factor income to abroad. Okay. Is the second part is also clear to you all? They do not have any alternative names, so I have not given you any alternative names for it. Okay, note this down and see if it is clear to you or not. When you are making that flow chart, revise in your head that why, very important, why we have to deduct NFIA and why do we have to add NFIA. That is very important to understand. Done? Any doubt? Shall we move to the next part?
Yes, ma'am.
Yes, all of you. Done? Oh, fine. So we'll go towards the next part. That line got erased. Just wait a minute. Okay. So here I said it's gross and net. which has a relationship with depreciation. Then I told you domestic and national, which has a relationship with NFIA. Third one was product, which was the alone thing. So product means nothing but good. It can be commodity. Okay, so this is only one. And last comes is market price and factor cost, which has a relationship with NIT. NIT is nothing but net indirect tax, which again we have understood it in a very thorough manner in our previous class. Fine. So now let us move towards our last term, that is NIT. Market price and factor cost, not a new term. Any idea, anyone? What is market price or what is factor cost? Anyone who can answer? What is market price or what is factor cost? No one? Why? In the first class only I have done the differentiation between price and cost. Okay, Mridula says purchase price and cost of production. Okay, fair enough. Fine. Market price is the price at which the goods and services are being sell off. Factor cost is the cost at which the total expense which has been incurred by the salesperson to produce or manufacture the product. See, now if you all have ever ordered food from Zomato, or if at all you have gone to a restaurant, best example is Zomato. Okay, now when you will go to the particular restaurant, say suppose Pizza Hut, McDonald's, Domino's, you will see that the price of that pizza is 500 rupees, and when you add this pizza to your cart, you do add to my cart, you are adding this. So when you are adding this, while doing the total payment, you will see that the same 500 rupees pizza, now you have to pay 560 rupees. What is the 60 rupees extra? So this 60 rupees extra is nothing but the taxes which the both producer and sellers pay. So you also have to pay 60 rupees and the seller's tax would be different. So this is the tax because of which your item, the product's item is getting increased. So for say suppose the factor cost was 500 rupees, they add tax for 100 rupees and now the market price of the same product had become 600 rupees. So this is nothing but market price and factor cost, direct relationship with NIT. NIT is nothing but net indirect tax which you have to pay, which the consumers also have to pay. So if I want to go from market price to factor cost, I will have to deduct NIT. Okay, I will do less NIT if I have to go from market price to factor cost. And same way, if I have to come from factor cost to market price, I will have to add net indirect tax. If I want to go from factor cost to market price, what I will have to do? I will have to add NIT. And if I want to go from market price to factor cost, what I will have to do? I'll have to do less. Okay, NIT is the indirect tax which the consumers has to pay. Now let us understand it through the formula. Market price minus NIT is factor cost. I am writing the short forms MP and FC. Fine. And same way, if you want to find out MP, then NIT plus FC. NIT is nothing but net indirect tax, which is also known as GST. Full form of GST is goods and services tax. Fine. Now we know NIT is nothing but net indirect tax, which is also the alternative name of NIT, which will give, they might give you in numerical question. The alternative name of NIT is GST, goods and services tax. Now NIT, at times they will give you directly, at times there is a formula to find out NIT. Formula is indirect tax minus subsidy. What is indirect tax? What is subsidy? We have cleared this in the last class. Indirect tax is a tax which we have to pay on the production of goods and services. Subsidies are nothing but the discounts which the government gives to the poor people. Okay, so NIT, MP and FC are directly related to NIT. If you want to go from MP to FC, you have to deduct NIT. If you want to go from FC to MP, you have to add NIT. Alternative name of NIT is GST, that is goods and services tax. So if in the question NIT is not given but GST is given, then in that case you have to consider GST as NIT. NIT is not given directly in the question, then they will give you in the format, they will give you two things, indirect tax and subsidy. In that case, you have to subtract indirect tax with subsidy. At times also possibility that they will give you indirect tax and they will not give you subsidy. So when they do not give you subsidy, you have to consider it as zero. Same way, possibility they might give you subsidy and not give you indirect tax. So in that case, indirect tax will be considered as zero. Fine. So this was our last line, MPFC. Quickly note it down and see if you have understood it or not. Next, we'll see little bit theoretical part and then move towards our numerical part. Done, right? Should I change the page? Anywhere, any point you all have not understood, let me know because it is very important. So here, as I said, we will get 8 aggregates. Let us find out those aggregates. What we will do is we will take first term from each line. Initial of first term from each line. So from this line, first term is gross. So let me write G. From this line is domestic. So let me write B. From this line, there is only one word. So I will write it as it is P. From last line, there is first word is MP. So add MP. Again, what we will do is from first line, we will take the first letter only, first word only. But from the remaining lines, we will take the second words. So here G, second line N, P as it is FC. Again, if I take first line, first letter and the from other line first only. So G, B, P, MP, G, N, P, F, C, G, B, JNPFC we already wrote, right? So GDPMP, GDP, this one would be FC, not MP. This third one is FC. GNPFC and GNPMP. So 4 aggregates related to gross. Next term, net. So NDPMP, NNPMP, NDPFC, NNPFC. So 4 terms related to net and 4 terms related to gross. Likewise, you get 8 aggregates in total. Now, in aggregates, all the 8 aggregates are very important. You have to jump from one aggregate to another aggregate. This kind of numerical questions are only expected. They will give you one aggregate, and with one aggregate you have to find out the other aggregate. They might tell you, they will give you GDP at MP and tell you to find out NDP at MP. So how you are going to jump from one aggregate to another aggregate? The formula I have right now given to you. The structure I have prepared, arrows I have prepared, that how you are going to go from one aggregate to another aggregate. That you will clearly more understand once we start solving it. As of for now, just understand these are the 4 aggregates, 8 aggregates total, and all the terms are interrelated with some or the other thing. GN are interrelated to depreciation, DN is related to NFIA, product is only one, MPFC is related to NIP. Full forms, alternative names, and formulas. All the 3 things are very, very important. Okay. So I hope till here everything is clear. If there is any doubt, let me know. If no doubt, then we will move further. No doubts? Just a minute. Give me 2 minutes. Just revise all the formulas what we have done now. Five minutes, just revise everything. Wherever there is any doubt, let me know. I'll be just back in 5 minutes. Okay, fine. So did you all go through the structure, the flow chart for formulas, net, gross, domestic, national, product, market price, and factor cost? Any doubts still here? Okay, perfect. So we said that there are total 8 aggregates. Two minutes, just wait. Okay, basic aggregates. So there are total 8 aggregates as we discussed, wherein we said that how we derived it: GDP, 4 aggregates of gross, 4 aggregates of net. Then these are the 4 full forms. See the full forms, read the full forms. Gross domestic product at market price, gross domestic product at factor cost, net domestic product at market price, net domestic product at factor cost. NDP at FC is also called as domestic income. Gross national product at MP, GNP at MP. Gross national product at FC, GNP at FC. NNP at MP, that is net national product at market price, and net national product at factor cost. So NDP at FC is called as domestic income. NNP at FC is called as national income. Fine. Okay. I'm so sorry. Just give me 2 minutes. Read these lines till then and just revise whatever we did.
Mm, Hello, Jenny, Gokul, and Mridula. Am I audible to you?
Yes, sir.
Yeah, actually, the thing is that Ritika ma'am facing some technical issue. So just wait for 5 minutes. She will rejoin again. Okay.
Okay, sir.
Okay. Just wait for 5 minutes.
Okay, let us continue. So as I that there are 8 aggregates. We saw the full form of those 8 aggregates. So these are the full forms, wherein we also said that NDP at FC is called as a domestic income, and NNP at FC is called as national income. Okay. Next. Next, they say that in every economy, there are various goods and services produced by different productive units on a regular basis. So such goods and services cannot be added together in the terms of quantity. That is why we call them as aggregate. So as I said already that on a regular basis, there are different kind of goods and services which are being manufactured and sold. So we can't categorized the units of each and every goods and services. So what we will do is we will make them a one unit, one term, and we will name it as aggregate. So they are expressed in the terms of money, and that is why we call them as aggregate. So now there are many aggregates in national income to measure the value of final goods and services. So let us understand about the each term. Very simple. We have understood all the terms, right? We know what is gross, we know what is net, we know what is domestic, we know what is national, factor, cost, market price. We know every term, right? Just here they have combined it with the different words, different terms, and made it a one aggregate. So first aggregate, say suppose, is GDP at MP. So we know what is gross. Gross means the actual value of goods and services. Domestic means the actual value, if I'm combining it with the gross. Actual value of goods and services produced in the domestic territory. Product means nothing but good. Market price, that means here we are going to consider the market price of the goods. For say suppose the market price of good A is 20 rupees, then when we calculate or compute GDP at MP, we will consider 20 rupees, and say suppose factor cost of the good was 30 rupees. Then we will not consider this 30 rupees, we will take only 20 rupees because we are calculating GDP at MP. So whatever the current market price of the product is, we will consider that under GDP at MP. So if you read the definition also, it will say the same thing. It refers to gross market value of all the final goods and services produced within the domestic territory of a country during a period of 1 year. So this is what they explain. This is what they are saying. Same way, if we go to the next aggregate, it says GDP at FC. So again, gross means the actual value of final goods and services. Domestic means the goods and services produced within the economic territory or domestic territory. Product means nothing but goods and services. FC means factor cost. So here the cost which we or the what we will consider the factor cost and not the market price. Same way, if factor cost of good A is 20 rupees and market price of the good A is 25 rupees, then we will consider 20 rupees and not 25 rupees, because here we are calculating GDP at FC and not at MP. Then NDP at MP, net domestic product at market price. Net means what? The market value of the goods and services. The net market value. Net market value means what? After doing the deductions from gross value, the total amount which is left out in our hand is called as net market value. So N means net market value of the goods and final goods and services which are produced in the domestic territory. Product means the goods and services at market price. Again, we will consider only the market price and not the factor cost. And also one more thing you have to focus over here. They are always saying final goods and services, final goods and services. Why? Because in the last class we have already studied about final goods and intermediate goods, right? So final goods are those goods which are finally ready to consume, ready to use. So while we calculate national income, we are always going to include final goods and services. We never include intermediate goods. We just include final goods. Next, NDP at FC. I'm not telling you about these formulas as of for now because they will unnecessarily confuse you. Just follow the chart and the formulas which I have given you. Don't go and look towards the formula which here they have mentioned. Next come is NDP at FC. So entire meaning remains the same. Instead of market price, we will consider here factor cost. Simple. And NDP at FC is also known as domestic income or domestic factor income. Relationship between GDP-MP. So GDP-MP, when you subtract NIT, you get GDP-FC. When you subtract depreciation, you get NDP at FC. When you add NIT, you get NDP-MP. When you add depreciation, you get GDP-MP. Okay, this flowchart you will very well understand once you start using these terms and solving the questions. As of now, it will be a little bit confusing. So GDP-MP, GDP-FC, NDP-MP and NDP-FC are four domestic concepts. Okay, so domestic signifies the contribution of only those producers which are included within the domestic territory of the country. So when we use the term domestic, it means only those producers or sellers who are within the domestic boundary, within the domestic territory. Next is national. So now the national part is beginning. GNP at MP. So instead of this domestic, it is replacing by N. So gross means the actual value of goods and services, final goods and services. National means the goods and services produced by a normal resident of the country during a one period of year. P means product, goods and services. Market price means here we are going to consider the market price of the goods and services and not the factor cost. GNP at FC. So GNP at FC is the factor cost. Okay. So gross national product. Gross means the actual value of goods and services produced by the normal resident of the country, and we are now going to consider the factor cost and not the market price. Next comes is the NNP at MP, net national product market price. See, I am not reading the definition and doing it because by the term itself, now it should be clear to us that what does that term means, what does that aggregate means, right? Because we know what is net, and we know what is national, we know what is domestic, we know what is market price and factor cost. So with the meaning of those things, it should be clearly clear to us that what does that aggregate is trying to explain us. So net national product at MP, net is the actual net market value, the value which is remaining in our hands after doing the deductions. That value of goods and services which is produced by a normal resident of the country and by considering market price. Last is NNP at FC, net national product at factor cost. So net means the net market value of goods and services produced by the normal resident of the country, which we are going to consider factor cost. And NNP at FC is also called as national income. Very important. Okay, so these were the four terms which were related to national. Now there are two differentiations between. I'll do one and another one I'll give you all as a homework part. So you all have to do it as a homework and come. So first, what is the difference between domestic and national income? 2 marks question expected in examination. On the basis of 3 categories, we are going to differentiate between the domestic income and the national income. First, the nature of concept. So what exactly domestic income is? So it is a territorial concept as it includes the value of final goods and services produced within the domestic territory of the country. So domestic income will include the final value of goods and services which are being produced within the domestic territory. Within the domestic territory means, for say suppose this is your country India. So whatever goods and services are produced within this territory, within this circle, within this boundary will be called as domestic income. Whereas national income, it includes the value of final goods and services produced in the entire world. Now say suppose this is an ABC organization which has shifted its branch to USA, and in USA it has a good income or a good profit. So this income will be considered under India. When we do this, we call it as national income. Like how we do exporting, that time also we are going to include the payment received from the foreign country in our country. We are going to include it in national income, right? So any goods and services produced outside the domestic territory, but which is situated in our country or which is the part of our country, that will be included in national income. Category, it consider all producers within the domestic territory of the country. So when we talk about domestic income, it will include only the producers which are located in within the domestic boundary, within the domestic territory. But national income means what? It will consider all the producers who are the normal residents of the country. So every producer who is termed as a normal resident of the country will be national, coming under the category of national income. NFIA, that is net factor income from abroad. Domestic income does not include any income which is coming from abroad, but national income will include the incomes which is coming from abroad. As I said, when we do export, what is happening? Foreign money is coming in our country. Domestic income will not include that foreign money, but national income will definitely include that foreign money which is coming in our country. Okay, so the basic difference between domestic income and national income. Okay, so if you all want, quickly just take 5 minutes break, then we will be starting with the numerical question of aggregates. So if you all want, take 5 minutes break, 5 minutes. If extra you all want to do the revision of what we did till now, take that 5 minutes also there if you all want. And then we will start with the numerical questions. While we do numerical questions, you have to know everything. You need to know gross, net, domestic, national, product, market price, factor cost, which terms are related to which term, like gross and net are related to depreciation. National and domestic are related to NFIA. Market price and factor cost is related to NIT, full form, alternative things, everything you should know. So take quickly 5 minutes break and 5 minutes to the revision of everything what we did till now. If you all have noted it down, very good. It will be very easier for you all to revise, as well as when we solve the numerical questions. Because now I am not expecting from you all that you all will learn the formulas, learn the alternative names and then solve the questions. No. Now this is our beginning stage, and in this beginning stage you all can refer to your notes which I am giving. All the formulas, all the alternative means, you can refer to it, no worries. But with time you will have to memorize that, understand that, and then do it on the basis of your understanding and by not referring the notes. Okay, so it's 7:18. By 7:28 we will be starting with the numerical questions. One or two questions I'll solve and show you all that how to do, and then the rest, third, fourth, you all have to try it from your end. Fine. Quickly, 7:28, I want everyone back. If there is any doubt, you all can come up with the doubts as well. Okay, let us start with the numerical terms. So important part for numerical question is the chart which I gave you all. Alternative names. So I'll write it down. Formulas. The chart or the formula in whichever format you all want to remember, you all can remember. You all are back, right? I'm not talking to myself. Please reply so that I understand that you all are there. Okay. Perfect. So I thought I'm just speaking to myself. So that should not happen. So formulas in the important thing. Alternative names important. And then again one formula you have of the terms basically and their full forms. These are the few important things which we have to take care of while solving the questions. Now, I hope you all have maintained the chart. You all have the chart and each and every note which I gave you from the starting of the session, because those things are going to help you to solve the numerical questions. Now, when we solve this numerical question, these are the just aggregates questions. So, aggregate questions can be asked for 2 marks or 3 marks, not more than that. Aggregate based questions are asked for 2 marks or 3 marks. Remaining 6 marks, 5 marks questions will be asked from the methods of national income, which we will be starting in the next class. But this class we will be understanding. See, these aggregates are very important to solve methods also. When we will start methods of national income, in there also you should know these aggregates, because there also you have to do the conversion of aggregates. So conversion of aggregates, the most important part from the chapter national income, which you cannot avoid. This so you should know only. It is the basic. Fine. So aggregates is basically how to solve the aggregate question. One aggregate will be given to you in the question and another aggregate they will tell you to find out. So what or how you are going to do. So first of all, first step, the aggregate which you have to find out, you will write it on the left hand side. So in the question they are saying calculate NDP at FC. First of all, let us see what they have given to you in the question. Calculate NDP at FC. So you have to find out NDP at FC. GNP at MP 8000 is given. That means one aggregate you have to find out. One aggregate is given to you in the question. Depreciation, directly they have given you the term depreciation. Net factor income from abroad, NFIA, directly they have given you. Net indirect tax, that is NIT, that is also given to you directly. Now first thing what you have to do is the aggregate which you have to find out, you will write it on the left hand side. So NDP at FC we have to find out. So we will write it on the left hand side. GNP at MP is already given. So we will write it on the right hand side. I'm so sorry. Now see what you have to do basically. Go to the first term of the given aggregate. It is G. And the aggregate which you have to find out is N. So that means you have to convert this G to N. That means you have to go from gross to net. Now in the flow chart, I have already told you what to do when we have to go from gross to net. So refer to the same flow chart or the formula which I have given and tell me what do you do to go from gross to net. Quickly. Okay. Gokul says minus depreciation. What about others? Jaini and Mridula? Plus from gross to net. Not from net to gross. You have to go from gross to net. Recall, gross is the actual value. Net is the value which is remained in our hands after doing the deductions. So what do we do? Minus depreciation, and then we get the net value. So gross to net minus depreciation. So you will write over here minus depreciation. Go to the next term now. Next term is N, and here it is D. So now you have to go from net to D, national to domestic. What do we do to go from national to domestic? National value you have, but you want domestic value. That means the goods which are only produced within the economic territory. So what you will do from national to domestic? Okay, Gokul says minus NFIA. What about Mridula and Jayani? National to domestic. National value you have, but you want domestic value. So what you will have to add or remove? You have to do minus NFIA. Minus NFIA, because national value is given, but you want domestic value, and we know in domestic value we don't include NFIA. So that is why we will have to do minus NFIA. Next term, P to P remains the same, product it is same, no need to change. Then comes MP to FC, market price to factor cost. Now from market price you want to go to factor cost, and we know that MP and FC has a relationship with NIT. So will you add NIT or will you deduct NIT to go to factor cost? Okay, Gokul says deduct. What about others? MP to FC, what do we do? We deduct NIT, that is net indirect tax. And the same thing you will be doing over here, net indirect tax. Now you have to simply put the numbers. GNP at MP is 8,000, minus depreciation is 600, minus NFIA is 300, and NIT also we have to minus, so NIT ka value is 700. Whatever the total you get over here will be your value of NDPFC. Simple. That is how you have to do the conversion. Now one conversion, you all do it and show me. Fine? Not directly question. I'll give you one aggregate, and I will tell you that you have to convert this aggregate into the other aggregate. Okay? Wait, I will tell you. GDP at FB, you have to convert it into NNP at FC. Now convert and tell me what would be added, what would be deducted, and everything. Okay, convert GDP at MP to NNP at FC. Start doing it. I'll give you all 2 minutes. Okay, in 2 minutes, I want to know the answer from everybody, that what they have done. Refer to that chart formula.
Hello, ma'am.
Yes.
Can you please zoom the question?
Yeah, sure.
Okay, I can see.
Wait. You have to convert GDP at MP to NNP at FC. Same way, take one term, go from right hand side to left hand side and see what you have to deduct or what you have to add to do the conversion.
Mom, values.
No values. This is
Okay.
just do the conversion. I just want to know what you're going to add, what you're going to deduct. No value.
Okay.
Now, scroll down. Yeah. Put your logical sense. We know gross is actual value, net is net value, value after deduction. So if I want the value after deduction, then I will have to have minus depreciation. Same way, domestic and national has relation. If I want only domestic value, then I don't want NFIA, so I'll deduct NFIA. But if I want national value, then I will have to add NFIA to domestic. Third term will always remain as it is. Product. PP is same. Done. Shall we discuss? Okay. So first is N to G. What do we do to go from net to gross? From net to gross. Okay. Gokul says plus depreciation. What about Midula and Jaini? What do you all feel? What to do if you want to go from net to gross? Add depreciation, deduct depreciation. Very good. Add depreciation. Next, from national to domestic. What do we do from national to domestic? Perfect. Minus NFIA. PP is same. Factor cost to MP. Perfect. Plus NFIA. Simple. One more. NDPFC. Convert NDPFC to NNPFC. One minute only. It's very small question. National to domestic, Mridula. See thoroughly. National to domestic, you have to go. This is net Here also it's net, no need to change. Same. National to domestic. What do we do from national to domestic? National value you have, but you want domestic value. You don't want national value. So what you will do to come at domestic value? Remove NFIA. So minus NFIA. P as it is. FC as it is. Same. No need to do any changes. So in such type of question, you will just write the value of NNP at FC minus NFIA. You will get NDP at FC. Very simple. One more last aggregate, then we will do it with the numericals. Okay.
Ma'am, for net to net, we have to add the power minus depreciation.
Nothing. As I said, same variables.
Oh, we can cancel it.
Yes, it gets cancelled out. No
Okay.
need to do anything. Like as I said, NDP at FC and NNP at FC. So N same. No need to do anything. No addition, no deduction, nothing. Now, yes, net to domestic, different, you will have to do the changes. P as it is same, FC also same. Again, no need to do anything. Leave it as it is. Okay. Okay. Next, GNP at FC. Convert this to NDP at MP. Chalo, 2 minutes, convert it. Convert GNP at FC to NDP at MP. Done? This fast you will have to be. But it should be accurate. Let us check. From net to gross, what do we do? Net to gross. Net to gross plus depreciation. You have to go letter by letter. Huh? You can't first go from MP to FC, then you will go from domestic to national, then you will go net to gross. Term by one, month by one. Next, from domestic to national. What do we have to do? From domestic to national. Perfect. Then FIA. And then P to remain as it is. From MP to FC. What do we do? From MP to FC. Perfect. Minus N. Very good. Okay, now we are more faster while we are converting the aggregates. Same thing, you have to do it in the terms of value. First question. Do the first question, find out the answer. Just after doing the conversion, you have to put down the values against the respective terms and see what the total answer is coming. So do the first question and then tell me what answer you all are getting. GNP at FC you won't have to find out. NDP at MP is given to you. So again, the aggregate which is given, the aggregate which you have to find will be on the left hand side. Find out quickly and tell me the answer. Sorry. Wait. This is the fifth question. We want to do the first question. I'm so sorry. This is the first question. NDP at FC, we have to find out GNP at MP is given.
No, we already did that.
So you did that previous one, it's okay, that will come. Acha, this one you did?
Yes, ma'am.
Okay. What is the answer you are getting?
6,400.
How much?
6,400.
Okay. 6,400 is the correct answer. Mridula, how come you're getting 7,100? Do the calculations properly. Once more. You have left one thing. That is why you're getting 7,100. Check it. MP to FC also you have to go now. So MP to FC means NIT is also going to be there, and MP to FC means minus NIT. You have not deducted 700. That is why you are getting wrong answer. Do it once more. Take as much as time you all want over here, but do it correctly. Okay? Here, no worries. Even if it is wrong, no problem. Even if you are taking time, no problem. But in exams, we have to be accurate. So here, it is time consuming, fine. But we have to be very alert and accurate while in exams, because usually we get excited. We feel, okay, now I know this sum. So we get excited about it and do some silliness. Try the next question. First, do the conversion. Then say depreciation is given to you as it is. NIT is not given to you directly. They have given you IT and subsidies. So in that case, first of all, you will find out NIT. We know the formula of NIT, IT minus subsidies. Then the total value which you get, you put it up under NIT. Same way for NFIA also, they have not given you directly, they have given you from abroad and to abroad. So we know the formula of NFIA as well, net factor income from abroad minus net factor income to abroad. After deducting whatever the value you are getting, you are going to put it under there. Okay. Try solving it. If you didn't understood, do as much as you have understood. Remaining, I'll explain. Gokul, small mistake. Very small mistake, or else your answer would have been right. Check it properly. Check the calculations. Done? Okay. Wait. We will solve it. Mridula, are you done? How much are you getting? Perfect. Correct, Mridula. Fine. So just we'll quickly solve it. The aggregate which we have to find out is GDP at MP. Okay. The aggregate which we have to find out is GDP at MP, and the aggregate which is given to us is NNP at FC. Now from net to gross, what do we do? From net to gross, what do we have to do? Plus depreciation. Then from national to domestic, what do we do? National to domestic, what do we do? Perfect. Minus NFIA. Then product remains as it is. Factor cost to market price, what do we do? Factor cost to market price. Factor cost to market price, what do we do? Very good. Plus NIT. Now we know depreciation is given to us directly in the question. NFIA is not given, NIT is not given. So first find out NFIA. NFIA is NFIA, net factor income from abroad, minus net factor income to abroad. Okay. So how much is net factor income from abroad? Tell me the value. Net factor income from abroad is how much?
And they gave like 110.
110. And to abroad is how much?
2.
Net factor income to abroad.
No, but why you have to calculate like NFIP 2?
See, why do we have to do? Because net factor income from abroad includes both the income. The income which our country has paid to the other country, as well as the income which other country has paid to our country. So we have to find out the difference between both of the things, both of the income. The income which has come inside our country and the income which has gone from our country. We have to find out the difference between that. That is why we will find out NFI. So factor income from abroad means the income which we have received from the other countries, and to abroad means the money which we have paid to the other country. So
Okay.
from and my 2 will get deducted. So from is 110, 2 is how much?
15.
110 minus 50, how much?
160.
160,
Sorry, sir.
110. How much? 110 minus 50?
60, ma'am.
60. Okay, so we got NFI ka value, so we can put it over here easily, NFI. Other thing is NIT. NIT ka formula we know, IT minus subsidies. So how much is IT? What is the
180.
value? And how much is subsidies?
Minus 70.
How much is the total?
110.
110. So we got NIT 110. Now see, depreciation is how much given to you in the question.
Okay, ma'am. I didn't do the net factor to abroad. That's it.
So thus, you have to find out the value. You will get the answer. Very simple. In the next class, few more questions we will solve of these aggregates, and then we will be starting with the methods of national income. Okay. Chalo, for today we will wind up, revise whatever we did today, all the formulas, flow charts, so that today it was fine. We were referring. In next 1 or 2 classes also, I'll be allowing you all to refer your notes and all while solving the questions, but then it should be known by you. Then we are not going to refer the books. Then you should know, and it should be in your tip of your tongues, that from net to gross what do you have to do, from MP to FC, from FC to MP, everything should be on tips of your tongue. Okay, so that we have to do from the next class. Go through everything. In the next class again we'll do a quick revision of it, so that we are aware, because this part is very important, which is going to be there while we do methods of national income also. So it is there also. So everywhere for the entire chapter, this is the important thing of conversion of aggregate. There might be not an individual question, but it is the part of your methods of national income. So any which ways you have to do this, and you should know this conversion of aggregates. Fine?
Yes.
Sure. So I'll meet in the next session. Bye bye.